Hey guys, welcome back to another week of Looking Beyond the Dividend. This week we're going to travel to Montreal, Quebec, Canada, and we're going to talk about a company that is spread across 10 provinces of our country with just under 1,500 stores. 80% of the Canadian population is within 10 kilometers of this retail store. Can you guess who it is? Stick around, I'll tell you who. Well, if you guessed Dollarama, you win. Nothing more than my admiration, but hey, a win's a win. From a financial perspective, the stock price of Dollarama has gone up 615% over the last 10 years. The sales in that same time have gone up 11.2% on a combined annual growth rate, and the net earnings 17.4% in that same amount of time. Along with that, they've had consistent dividend increases and they've opened an average of 70 new stores per year for the last 10 years as well. And from a personal standpoint, and yes, pretty much everywhere I've ever been or lived, I have not been more than 10 kilometers from a Dollarama either. I think one of its most appealing things, other than obviously some great financials, is the fact that it's a pretty much recession proof store. And I know for me personally, it's one of those stores that I always go in planning to pick up something, and it might be something that's $1, $2, $3. And by the time you're finished, you're coming out of there spending 30 or 40 or $100. It's one of those stores that just has everything. And sometimes the things you don't even think you need, you probably don't need, you pick up anyway because you're there. And that's one of the real appealing things for an investor is having people go into the stores like that. And I talked last week about Canadian Tire. Canadian Tire on a little bit of a higher cost is a very similar store that they have so many different things for you to purchase. But Dollarama is that low cost type store that you also walk into, as I said, planning to spend a couple bucks, and you don't always get out of there only spending a couple bucks. So at this point, you might be asking, are there any red flags at all with Dollarama? Well, there is kind of a couple. And the first one I have to talk about is their debt. They do have a lot of debt. Currently, as of May 2023, they're looking at debt in the range of $3.63 billion, which is quite high. However, most analysts agree that with their current earnings and their current free cash flow, they're more than able to carry that debt and pay it off without any real great concerns. The other red flag, if you will, which is kind of a bit of a bigger one for me at this point, is the fact, and it's kind of weird for me to be saying this, but currently Dollarama may be a little bit overvalued. As I said, they have a very good track record of their cost, or excuse me, their share price, and their dividend keeps increasing year after year as well. But that dividend is currently only 0.34%, or basically 6 cents per quarter on every share that you own. Modest payment, but a company that is continuously growing. And another one that we have in our portfolio right now is Alimentation Couche-Tard. I guess the question that we have to ask ourselves, are we going to park our money in a company like Dollarama for those increasing dividends year after year, or are we going to go for a higher yield? Right now, that's kind of the question that I have. And one thing I need to kind of make a decision on. I'm currently not invested in Dollarama, but it is a company that I'm looking at right now. And I guess that's probably the best I can give you at this point. Is this a company that I will invest in? I'd say it's a pretty good chance that I will. I do like everything about it. It's very similar to Alimentation Couche-Tard, which we are already in. Will I invest in this tomorrow? I don't think so. But it's certainly on my watch list, and it's one that I'm going to keep an eye on. And if there is any dip in the price, I think that might be a good entry point for us. But at this point right now, it's nothing more than just a watch. Certainly a good stock, but it's not one that I'm going to get into right away. So that's going to wrap it up for this week. Looking beyond the dividend, we've been talking about Dollarama, headquartered in Montreal, Quebec, Canada. As I always say, this is not been investing advice. It's just me and my wife and our portfolios and some of the stocks that we're invested in and looking at investing in. As I always ask, if you've appreciated or enjoyed this video, I would please ask you to consider subscribing to the channel. We've been getting a lot of subscribers of late, and it is certainly appreciated. Until next time, take care, and we'll talk soon.